You know, right now, the biggest story in finance isn't what you'd think. It's not a market crash or a huge interest rate hike. No, it's a potential criminal investigation into the world's most powerful central banker, Jerome Powell. And the craziest part? It all starts with a building renovation. So let's break down how this one construction project could have global consequences.
I mean, the headline is just a bombshell. We're talking about reports claiming that the Justice Department has served the Fed with grand jury subpoenas, and that Jerome Powell himself has been threatened with a criminal indictment. This is not politics as usual. This is a really serious legal threat aimed right at the heart of the U.S. financial system.
So, what's at the center of this whole firestorm? The renovation of the Fed's headquarters in Washington, D.C. And that number, that $2.5 billion, that's the key. The entire controversy really hinges on what Powell told Congress about the cost of this massive project.
All right, so to make sense of all this, we're going to quickly cover four things. First, the investigation itself. Then we'll decode some of that legal jargon. After that, we'll look at why the markets care so much. And finally, what to watch for next.
Okay, let's dive into the investigation. And just a quick heads up here. We're explaining the reported facts and breaking down the legal terms. This is not legal advice, and we are absolutely not handing down a verdict.
So the core of what's being reported is this. Apparently, grand jury subpoenas have been served. Powell himself was reportedly threatened with an indictment. And again, it all comes back to his testimony to Congress, all about that massive $2.5 billion renovation.
Right, so all this talk of subpoenas and grand juries can get a little confusing, right? So let's just quickly break down these key legal terms. That way, we all know exactly what's going on here.
First up, subpoena. Really, it's just a legal order to hand over documents or show up and testify. But the key thing here is that these are reportedly grand jury subpoenas. And that's a big deal, because those are the specific tools prosecutors use when they're gathering evidence for a criminal investigation.
And that, of course, brings us to the grand jury. Now, it is so crucial to understand this is not a trial. A grand jury is a secret, kind of one-sided process where prosecutors basically lay out their evidence to see if they even have enough to bring charges. So you can think of it as a preliminary step inside an investigation, not the final verdict.
You're also going to hear two other terms thrown around: perjury and false statements. Now, they sound similar, but there's one really key difference. Perjury is specifically about lying under oath. The false statements law, though, is much broader. It basically covers lying to the federal government in almost any official situation, whether you're under oath or not.
Okay, so let's be absolutely crystal clear on this, because it is the most important distinction to make. An investigation is not the same thing as an indictment. It does not mean charges have been filed, and it definitely doesn't mean they ever will be. This is such a critical point to remember as this whole story unfolds.
All right, so that's the legal stuff. But you might be wondering, how does all this translate into something that could actually hit the economy? Why do financial markets care so much about some legal probe? Well, it all comes down to two really important words: Fed independence. This is the bedrock principle that the Fed makes its decisions, on things like interest rates based on economic data, and not because of political pressure. I mean, the credibility of the entire U.S. financial system is literally built on this foundation.
And something like this can set off a really dangerous chain reaction. See, if investors even suspect that the Fed is bending to political pressure, its independence immediately looks compromised, and that injects a huge amount of uncertainty into the markets. Pretty soon, investors start demanding something called a risk premium just for holding U.S. assets.
So what is a risk premium? Well, it's pretty simple. It's the extra return investors demand to hold an asset they think is risky. You can kind of think of it as danger pay for your money. And for the rest of us, that translates directly into higher borrowing costs for pretty much everything, from mortgages to car loans.
And look, this isn't just some theory. The political fallout is already happening. I mean, take this quote from Senator Tom Tillis. He's saying he'll block Fed nominations until this whole thing is resolved. This shows you exactly how a legal investigation can immediately be turned into a political weapon against the institution itself.
And the timing of all this just adds to the drama, doesn't it? Powell's term as chair ends in May 2026. That means the clock is officially ticking on choosing his successor. And now this entire investigation is just hanging over that whole process.
So what we have here is a legal probe, a political deadline, and this huge debate over the Fed's independence, all colliding at once. So what should you and I be watching for as this story develops?
I'd say keep an eye on three main things. First, any official legal filings or new reporting that comes out about those subpoenas. Second, listen really closely to the Fed's public statements. See if their tone changes at all. And third, watch for any signals from the White House about a successor as we get closer to that May 2026 deadline.
You know, when you boil it all down, this whole thing really comes down to one central question. Can the world's most powerful central bank, an institution that was designed to be a stabilizing force, truly stay above the political fray? The answer, whatever it ends up being, is going to have consequences for every single one of us.